Let's discuss this further now with Peter McGuire, who's Australia's Chief Executive Officer at Trading.com and joins us from Sydney. Peter, good to have you with us. So Brent crude at above $100 a barrel since Russia's 2022 invasion of Ukraine. How significant is this for global energy markets, and what are the markets reacting to exactly? Is it purely geopolitical risk pricing, or are we already seeing signs of structural supply disruption?
Well, Folly, I think that's multidimensional in so many ways, but the more important thing at the moment is the velocity of what we've seen as far as move to the upside. No doubt on Thursday you were looking, around that 75 to 80 odd dollar, and then all of a sudden 90, and now we've had a high of 116 in Asia trade today. We're back at around 106, 105, but the volatility swings over a given hour are just dramatic. So this is going to impact naturally consumers and, in the long run, one would think inflation if this was to last for a matter of weeks or possibly a month or more.
Just to understand, Peter, are markets reacting more to actual supply losses or to the fear of escalation in the Strait of Hormuz and the wider Middle East region?
I think it's a combination of both. I think the fear naturally in market sentiment and the worry about getting shipping through and the draw of what those barrels, where they need to go is in the sense of Asia. There's much concern, and it's an unknown situation. When is supply going to come back online? So there's the first part, and then the trepidation across the market as a whole, with traders really ramping prices up dramatically, and that's really impacting, I think, consumer sentiment.
An unknown situation, as you say. Now, if Gulf producers start declaring force majeure on shipments, what does that mean practically for the physical oil market?
I think it's going to cause much concern naturally, but the other side, of course, is price swing to the upside, and that's the unknown. How many? We had 25% up today, or 27%, I think, was the high, and we've only early in the trading day in the sense Europe and naturally the US have got to come on market. But that swing, we could see moves of 30% or more in a session. So I think the issue at the moment is if there is force majeure, then you're going to see a big spike to the upside, and maybe 140, 150 is very achievable.
All eyes, of course, on the US right now. Do you think US shale production ramp up could quickly enough, if it happened quickly enough, do you think that could offset some of this shock?
Well, it'll offset a little bit. There's no doubting that. And America is the #1 producer in the world at the moment, fully, and by a long way. But it does take time. I think you don't just flick the switch and on it goes. You're talking about a lead time, and that's going to take a matter of weeks, if not month or more, to really get and harness all that extra production. So it all takes time, and that's what the consumer doesn't have at the moment with the value of what's happening at the pump.
Yeah, the Financial Times is reporting, Peter, that G7 finance ministers may discuss a coordinated release of crude from strategic reserves through the International Energy Agency. Yeah. How effective could that move be in calming markets, given the scale of disruption we're seeing right now?
Well, SPRs, as far as that would calm the market to some extent, and that's very mindful. And one would think that would help consumers and also market sentiment. I think it'd strip out a little bit of volatility, and it's just the way it's positioned and the way that that's enacted. So it's very much a wait and see to see if the governments are prepared to move along that strategic footprint. And if they are, how the market's going to interpret it. And that's one thing it does, Folly, and that's called price.
Yeah. Looking ahead to the next few weeks and months, do you think, Peter, the market has already priced in the worst case scenario, or could we still see another major spike? What variables are going to dictate the market response in the coming weeks and months, do you think?
Well, it's only about day 9, and it doesn't seem to be losing any steam. The whole situation seems to be, in actual fact, from a viewer from Sydney, I'm seeing it actually increase. So, yes, I do think you're going to see these swings and large, I suppose, explosive moves to the upside, very achievable in the short to medium term. And if this was to last a matter of weeks, I'm sure that you'll take, as I said, 140 to 150 out, because it's not a long way to go when you see 25 and 30% moves in a trading session. All
right. So finally, Peter, which sectors will benefit from these kinds of geopolitical oil spikes, and which sectors are at risk here?
Well, you've got to worry about if you're looking across the framework as far as banks, what happens is, the actual, the indices themselves, and that's been demonstrated with the likes of the NASDAQ down nearly 2% in today's trade on the futures. So looking at technologies, the winners are going to be naturally what's happening as far as energy producers and I think all of those supply chains. So one's got to be strategic in their investment portfolio and look at and see how quickly things move to the upside and be across a broad range of, investment opportunities.
Peter, thank you so much for talking to us about this. Thank you for explaining it so well for us. Peter McGuire is Australia's Chief Executive Officer at trading.com and he was joining us there from Sydney. Thank you so much for your time.